We at Hawkins Co work with a lot of startup companies, and for many of them, when we're meeting for the first time, the entrepreneur, the business owner will say to me, "Jules, we'd like you to help us with your accounting." And I said, "We're delighted to, but on the other hand, let's have a conversation about what that actually means." Because many people, although they know they've got to keep track of their numbers, and they should keep track of their numbers, haven't really had the opportunity before to think about what that means, what the various roles are, and so forth. So what I'd like to do is spend a few minutes explaining and talking around what those criteria are and what those different roles are. Although it's a bit of a continuum, I like to lay it out as essentially there being three different roles in accounting. One of them, the first one, is bookkeeping. Most people have a rough idea about what that is. The next one is the controller role, and we'll talk about that one in a bit more detail. And then you've also got the public accountant role. Public accountants come in all shapes and sizes, but they include the global giants such as KPMG, PwC, Deloitte, right down to your individual practitioner or your smaller regional firms, of which we have quite a few in Windsor, Ontario as well. So, to step back and say, what do these roles do? Bookkeeping is, as the name suggests, it is recording transactions. Frankly, it's not glamorous. It's very routine, it's detail-oriented. You make a transaction, you record it. You buy something, you record it. You sell something, you record it. You collect from your customer, you record it. In itself, it's not necessarily a highly skilled role, because so long as you understand what it is you're doing and you understand the system that you're using and how to use that properly, it really is just a lot of keying in and data input. Many business owners, when they start out, like to do their own bookkeeping, partly to save costs. Obviously, when you're starting out, money is not necessarily there's not necessarily a lot of it around, but on the other hand, also so you can keep control and know what's going through. So the key thing about bookkeeping, as I said, is relatively low skilled, at least in that part of the job, and there's a lot of grunt work to it as well. As such, people frankly view it as being low value. It's never the most important thing to do. People do it because they've got to get it done, they've got to get their taxes filed or so forth, but it really is not exciting to them and it's not helping them run their businesses. Okay. You can hire bookkeepers to do that work for you, obviously, and the amount you pay will range from being slightly above minimum wage to being a significantly higher amount of that. People who are earning or charging them towards the higher amount of that are really taking on more of the controller role. This is a bit of a role which is understood, misunderstood. People often say controller and all they've heard of is in the context of a big organisation and they're thinking of a $60,000, $70,000 a year salaried position full time. That might be the case in organisations such as that, but for many smaller businesses, they really need somebody in the controller role, but it can be as little as one morning a month or one morning every other month. And the controller role does exactly what the name suggests. It keeps things under control. It's mainly an internal role with the organisation, but it also helps the business owner get the comfort that things are done right with the outside world. How do we mean by that? Well, let's look at this. First of all, how does the controller interact with the bookkeeper? The controller helps the bookkeeper by setting up. So the bookkeeper knows what it is they're using. They've got a system that's correctly calibrated or configured, and the controller also trains them or provides them with support so that they know how to use it. Then the bookkeeper in exchange has got somebody whom they can phone up and say, "Help, I've done something wrong, what do I do?" And then the controller can advise them. Okay. The controller also supports the business owner in a couple of ways. First of all, there's what I call the hygiene factors. Allows the business owner to sleep at night. That's got several factors. First of all, you've got your checks and balances, which is essentially making sure that what the bookkeeper has been doing, which may be the business owner, is being done correctly. So, for example, the various procedures such as reconciliations, which make sure that what the accounting records say have gone through the books and records is the same as what the bank statement says has gone through the books and records. Checks and balances such as that. Then you'll have your monthly filings or quarterly filings, such as HST if you're in Canada, or payroll, remittances, and things such as that. So essentially, the business owner is able to know that their numbers are being kept current, they're being kept right, and that they're on top of what they've got to do just to keep those compliance things ticking over, those nasty little things that can cause a lot of angst with the taxman or with the government if it gets wrong. Even if you're a very diligent business owner, but this isn't what you do every day, everybody I talk to still got that little niggling paranoia in the back of their head saying, "I think I've got it right, but I really don't know." So this obviously, the controller role gives comfort to the business owner, And more to the point, this then feeds into the other side of it, which is what you might describe as business intelligence. A good controller will be able to sit down with the business owner once a month or once a quarter or how often is needed, and be able to say, okay, let's have a look at these numbers. What are they telling you about your business? You spent a lot of money on advertising, did it move the dial on sales? Or I see your gross margins are under pressure, is that because of the cost side of what we're buying in, or because I'm having to lower prices? Is there anything we can do about it? And it's not just being in a position where the business owner gets guidance from somebody who's trained to think financially, but also because the hygiene factors are in place and you know the numbers are reasonable, then you'll know you're making your business decisions with good data. There are far too many times I have business owners who come to me who have not engaged anybody in this role. They've attempted to do the bookkeeping themselves, but because it's not seen as value, because it's really just a compliance exercise, they've done it, and they've done it late in front of the TV, or it's after the event and they've got to rush it. It's not adding any value because it's several months after the event. And as a result, they come to me and they say, Jules, I have no idea how I did. I know what I've got in the bank statement, on the bank account at the end of the year, but that's about it. I don't know if I made money or lost money, who owes money, or who I owe money to. If you have a good controller position in place, you don't need that. And as I said, although in big organizations it's a full-time role, for an owner-managed business, particularly starting out one, you can have a bookkeeper who's doing most of the grunt work, the data entry, and the controller is very much a part-time position, maybe one morning a month or one morning a quarter. And many of our clients say to us that that is the most valuable morning they spend. Just to go back to this at one point and to talk a little bit about how we do this at Hawkins Co as well. There are many different ways in which you can do the basic bookkeeping. You can use pen and paper, or you can use Excel, neither of which we recommend, or you can use other accounting packages as well. QuickBooks is a well-known one that's loved by many business owners, or there's Sage Accounting, and there are several others as well. We very much embrace web-based platforms. The two that I'll name that we endorse are Xero with an X, and QuickBooks Online, but there are also other ones such as FreshBooks or Wave. All of these have several options open to the business owner, but there are two things that we particularly like, or several things. First of all, they're web-based. That has the advantage of better security, better backups, and also it means that if we're helping you as your controller, we can share it. So you can phone up and say, Jules, I've done something wrong, can you jump online and have a look? And I'll look at it and say, yep, there you go, here's what you did, let's fix it, show you how to do it for the next time. So web-based helps collaboration. Secondly, because they're web-based, they're using a lot more of the technology now that allows you to eliminate much of the grunt work out of traditional bookkeeping. So, for example, if you have your business bank account or a business credit card, the systems can be set up so that it will automatically populate your accounting system from what it's got in the business through the bank statement. All the business owner then needs to do is just to drop it into the right bucket. And the technology gets even better than that. It gets smart. So it can say to you, I see this is the third time that this automatic payment has been coded to rent expense. Would you always like me to do that? And so forth. So it can really eliminate a lot of the drudgery of bookkeeping. We've found that many of our clients who traditionally had an arm's length bookkeeper, that somebody they brought in, after they migrated to one of these platforms, then they have real-time information, but the automation has done so much that they're actually able to stop hiring or cut back the hours of their traditional bookkeeper, and in some cases they've taken on that role themselves. So we love to help people get onto these platforms. It allows us to see what they're doing and help them in real time. It allows the business owners to have real current information, and it also allows us to make sure that we're doing those checks and balances on a timely basis. Finally, because it's web-based, it is in real time. And these systems are set up with really nice interfaces so that you can see how you're doing at any point in time. So, for example, you can tell at a glance how much you owe in sales tax for this month or for the last quarter that you've not yet paid over. And also, they're really user-friendly. Many of the old accounting systems were designed for accountants and non-specialist business owners who knew a little bit about bookkeeping but not much, would attempt to use them, but they really weren't user-friendly. The newer web-based platforms that we suggest that we endorse and use ourselves are very much designed with a business owner's interface. It uses terms that you can understand, such as things I owe, money owed to me, but it's also got an accountant's back end. It has all the functionality that the accountant or your controller needs in the background. So those are the two key roles that a company needs an accountant for. In many cases, that is done internally or it's done by a separate body. But it's mostly internal, but obviously with interaction with the government and so forth on a regular basis for filing your compliance and things like that. The third role is the external one, much more external facing, which is the public accountant role. The public accountant isn't really involved in helping you run your business day to day, but the public accountant is what you might describe as higher level, periodic or event driven. So for example, the public accountant will deal with things such as your business structure. For example, should you be operating as a proprietor, or is it more appropriate for you to be in a partnership or to have a corporation? They will help you with tax planning as well as compliance. Many people go to their public accountant just to get their year-end tax return and financial statements done, but if it's just compliance, just getting the return done, you may be missing an opportunity, and a good public accountant will help you by planning and setting it up so that you're appropriately legally minimizing the total taxes that your family and your business pay. Then you've also got the other stuff, which is going to be more event-driven, such as, for example, purchases and sales of businesses, of assets, going to the bank for financing, and so forth. So the traditional public accounting role is somewhat separate from the internal role, although there's obviously overlap. So those are the three traditional roles. They have historically been very separate, they've been distinct. With the technology, they're now starting to merge, but the roles remain separate, but the way in which they interact with each other and the way in which they're executed are very much being blurred and updated by the emerging technology that's coming out today.